Hey, welcome back to the show. It's November 30th. Hope you had a wonderful Thanksgiving. I know I did. Always wonderful to get together with friends and family and good food. Easy travel for me, thank goodness. Hope the same for you. 4 weeks till Christmas, New Year's, and closing out 2025. The sell-off in equities was reversed this past week, helped along by the Fed's plunge protection team, this time led by New York Fed President John Williams. The New York Fed President is a permanent member of the FOMC. FOMC is meeting December 9th and 10th to decide on interest rates again. Speculation is, our markets forecast another 25 basis point cut in the federal funds rate, take it to 3.5 to 3.75 is the new range. Equity's been selling off since October 29th-ish, reached a low we haven't seen since the start of September. And sure enough, right on cue, someone from the Fed comes to save the equity markets, to preserve the wealth effect. Blatantly unfair what the Fed's been doing with respect to stocks since 2009. We think about the widening gap, income gap, wealth distribution gap. Think Fed, helping those who have and not helping those who do not have. Awarding risk takers and punishing those who are more risk averse. Punishing fixed income investors, rewarding risk takers in the equity markets. Williams said this: I view monetary policy as being modestly restrictive. Therefore, I still see room for a further adjustment in the near term to the target for the federal funds rate to move the stance of policy closer to the range of neutral. Not surprisingly, U.S. Treasury yields dropped and equities rallied. Williams went on to say the job market appears to be softening. Says there's been progress on inflation that has temporarily stalled, with prices rising at a rate well above the Fed's 2% target. He said he expects price pressures to ease as impact of tariff passes through the economy. And went on to say the Fed needs to reach its target on inflation without creating undue risk to our maximum employment goal. And there you have it right there. The dovish comments: protect crypto, protect equities, get that rally back up, get that wealth effect back in effect. Yet he's displaying the silliness of the dual mandate. We got to get rid of the dual mandate. The full employment mandate has to go. The Fed's only mandate should be price stability, period. Of course, maintaining stability in the banking system and its other responsibilities. So since the 21st, stocks have rallied back up to their near-term highs, and everyone's relief and calm again. The Fed has done their job, plunge protection. Though for this past holiday shortened week, equities went back to a little risk on. The tech sector regained some ground lost during the past few weeks. Bitcoin back up into the low 90,000s. Precious metals continue to climb. Silver at a new record high. Looks like Thanksgiving Day spending and Black Friday Day spending was strong. Estimates around $6.4 billion on Thanksgiving Day. Expecting Black Friday to be up almost 10% year over year. We saw a bunch of data, old data that was released, that was postponed during the government shutdown. Overall picture is kind of mixed. We get some producer prices a little elevated. Again, dovish indications from Fed speakers that the jobs mandate will dominate the pricing mandate and the Fed will cut rates in December. We had some positive news on Ukraine, Russia. Looks like we might have a deal, though Putin dragging his feet as always. Trump spoke with Venezuela's President Maduro on the phone. Seems to be inching closer to some action against Venezuela. No restart on trade negotiations between Canada and the United States. Treasury yield curve came down a touch over the week on the back of dovish Fed comments, expectations of the rate cut in December. 10-year hovering around the 4% mark. Some retailers provided a boost in stocks over the week on the holiday season. Dick's, Kohl's, Urban Outfitters, Abercrombie & Fitch. And on top of that, Walmart, all saying positive things about the consumer. Zoom, Intuit, Autodesk, Zscaler, Workaday, all beat estimates in their earnings. AI names got a boost when the White House announced considering looser restrictions on NVIDIA's H200 chips to China. And a noticeably China-friendly Trump tweet regarding a call with Z on November 24th. Trump is back and forth on China. What's he doing with China? Are they a foe or not, Trump? Health insurers a little volatile this week as Trump is speaking about a plan to extend Affordable Care Act subsidies for 2 years. Although that was quickly batted down by congressional Republicans. Trump is just all over the place. Stick with a plan. My goodness, he said Obamacare was crap and he wants to extend the subsidies. He blames Obamacare for the cost increases in health insurance and medical care, and he wants to extend the subsidies. Subsidies that were just fought over during the government shutdown. That's what the Democrats wanted, was extension of these subsidies. And that's why Democrats shut down the government. And here's Trump talking about extending the subsidies for 2 years. Shocking. Quick check on markets. S&P 500 is going to start the week at 6,849 near-term high. 10-year trading 4.02%. 30-year trading 4.66%. We still have inversion in the yield curve from the 1 month through the 3-year. Not good. 1 month treasury 3.97%. The 3-year 3.5%. Yield curve inversion means there's concerns about near-term inflation pressures. Checking on the dollar. Dollar trading against the euro 116. Dollar yen trading 156.15, a recent high. Against the British pound, sterling 132.40. Ruble's trading 77.49. Dollar selling off a little bit, but still well within recent ranges. What we need, of course, is a weaker dollar here in the United States to help us reverse our trade imbalance to make exports less expensive and imports more expensive. Of course, there are inflationary concerns when you allow the dollar to weaken. But if Trump's really serious about trade, we want the U.S. dollar to weaken, and that's okay. Nothing to be concerned about. West Texas Intermediate oil trading 58.48. Nat gas 486. Gold trading 4,256. Silver 57.08, all-time high. Cocoa still bid 5,550. Coffee still bid 378.95. Little check on markets. All eyes on the Fed for the next 2 weeks. Checking in on data for the past week or so. On Tuesday, we had producer price index for the month of September. Came out 0.3% as expected, higher than the prior month. Looking at the core PPI, excluding food and energy, up 0.1. Not bad. Year over year, though, headline up 2.7%. Core up 2.6%. We still have a problem with inflation. CPI data should be out this week. Also on Tuesday, we had retail sales for September up 0.2%. Year over year, 4.26%. Good number there. More indication that the economy is okay. The economy doesn't need lower rates. So we still have high levels of inflation. Consumer seems to be in good shape, although it's all debt. Let's be honest, this is all debt. Consumer confidence from the conference board came out for the month of November, 88.7, lower than expected, lower than the prior month. Pending home sales for October up 1.9%. Not bad, better than expected, better than the prior month. These are homes in contract, waiting to go to closing. Good sign there. 30-year mortgage around 6.3, 6.4%. We had just another horrible budget balance for the month of October. Federal budget balance for month of October, minus $284 billion. Minus $284 billion. That's the first month of the fiscal year. That's on pace. I know it's only 1 month. Extrapolation is dangerous. That's on pace for a $3 trillion annual budget deficit. That's adding $3 trillion in new debt in 1 year. Interest payments on this will now make interest on our national debt the second largest expenditure after Social Security at the federal level, $1.4 trillion. And here's the real problem when you get into debt. It's not the creating money. It's not the rolling over of bonds. It's the interest payments. $1.2, $1.4 trillion a year. Really bad news. And that's Republicans in control. I mean, every time. It doesn't matter who's in control. Democrats or Republicans, deficit spending just gets worse and worse and continues, robbing the future. $284 billion budget deficit in 1 month for the month of October. That is poor governance. Every member of Congress should be removed for failing in their constitutional responsibility here. Just horrible. Wednesday, as always, had mortgage applications for the week ending the 22nd of November, up 0.2%, better than the prior week. A little bit of refis there. Mortgage rate 6.4%. Claims data out for the weekend of the 22nd as well. Good number, 216K against 226 expected, 222 in the prior month. Indication of a good labor market. Unemployment rate's at 4.4%, well within the range of full employment, unemployment. Claims at 216, inflation approaching 3%. And you're talking about the Fed cutting rates. These indicators do not suggest the Fed should be cutting rates. Chicago PMI for November, 36.3. Worse than expected, worse than the prior month. Below 50 is contractionary. That's an old story. Chicago PMI, Purchasing Managers Index. This week coming up, we have construction spending on Monday for September. Nothing out on Tuesday. Wednesday, as always, MBA mortgage applications. ADP non-farm employment change for November comes out on Wednesday. Capacity utilization, industrial production on Wednesday. So we definitely have some market moving data coming out this week. Claims will be out as scheduled on Thursday at 8:30 for the week ending the 29th. And then on Friday, we should get a jobs report. Let's hope we do. Jobs report, the employment situation report comes out the first Friday of every month. This is certainly the case here in December. ADP's out on Wednesday. Now, it's not on the calendar, but let's hope they get it together and get a jobs report out on Friday for the month of October. We did get some data out on jobs on the 20th, Thursday the 20th, for September. So some old data there. We'll talk about that in just a second. Also on Friday, factory orders for September and Michigan consumer sentiment out for the month of December. Okay, so plenty of data to lean on for traders and investors. Got some data that might move the Fed one direction or another when it comes to this rate cut. And let's see if we get some jobs data for October on Friday. Speaking about that jobs data, we did get some data out on the 20th for September. Total non-farm employment edged up 119,000 in September. Little change since April. The unemployment rate was at 4.4%, little change from September. Employment trends were up in healthcare, food services, drinking places, social assistance, job losses in transportation, warehousing, and federal government. The number of people unemployed, 7.6 million. Year over year, it's higher. A year ago, unemployment rate is 4.1%, number of unemployed 6.9 million. Today, 4.4%, 7.6 million. But still well within the range of what we call full employment, unemployment. Amongst the major worker groups, unemployment rates for adult women, 4.2%, for Asians, 4.4%, adult men, 4%, teenagers, 13.2%, whites, 3.8%, blacks, 7.5%, Hispanics, 5.5%. Number of long-term unemployed, those jobless for 27 weeks or more, changed a little at 1.8 million. Long-term unemployed accounted for 23.6% of all unemployed people. Labor force participation rate, 62.4%. Employment population rate was 59.7, both little changed over the year. Number of people employed part-time for economic reasons, 4.6 million. Not a big change over August. These are people who prefer full-time employment but are working part-time because their hours have been reduced or they're unable to find a full-time job. Number of people in the labor force not working, 5.9 million. We don't need any more immigrant labor. We have plenty of people that want to work. These people are considered discouraged workers. They're not counted as unemployed because they're not actively looking for work in the past 4 weeks. Since Trump took over, federal government employment is down 97,000 since its peak in January, down 3,000 in September. Average hourly earnings up 0.2% to $36.67 for September. Average hourly earnings have increased 3.8% over the past year. The average work week, little change at 34.2 hours. A decent report for the month of September. A low growth economy, that's what that reflects. And some weakness in the structure of the labor market. Not a lot of full-time jobs being created. Record number of Americans working multiple part-time jobs. Unemployment rate ticking up a little bit, but still well within full employment, unemployment ranges, NAIRU, non-accelerating inflation rate of unemployment. And real wage gains happening, no question. Real wage gains in the economy for the year 2025 for most sectors. That is to say, their nominal wage gains are higher than the rate of inflation. So we think of real wages, we adjust nominal wages for inflation. We can identify an increase or decrease in real wages. And the data indicates that real wages are rising over the past year, and that's good news for sure. but again, a little inflationary. Other recent data that got my attention was the August international trade in goods and services. Of course, it's a deficit. We've run deficits for decades and decades, of course, but better. $59.6 billion deficit, down 24% since July. 59.6 billion in August, 78.2 billion in July. Good move there for sure. August exports 280.8 billion, up small over July. August imports 340.4, down 18 billion from July. So good directional change for sure, but still at levels that we saw prior to the Trump's election and Trump tariffs. The reason why the trade deficits have been so large the past year or so is that importers have been front running. Importers in the U.S., exporters around the world that want to ship to the U.S. have been front running Donald Trump's threat of tariffs for some time now. All through 2024, we had record goods and services trade deficits reaching as high as $140 billion on a monthly basis. So we're moving in the right direction, but we still have a long way to go before we can indicate a correction in the data. We need this number to get down to the 30 billions before we start saying we've won this battle on trade. And again, the back and forth Trump has had with tariffs, tariffs on, tariffs off, who has which tariffs, has been confusing for importers and exporters, both overseas and here in the United States. And so good directional change for sure on the trade side, clearly related to Trump tariffs. But we've only come back now to where we were prior to Trump kind of being the front runner in the 2022, 2023, 2024 time period. To see evidence of real impacts on trade, we need to see our monthly goods and services number down into the 30 billions. Remember now, this is goods and services. We run a surplus in services. The better number to look at is the trade balance in goods only, which we should get out here in a couple weeks. And that number needs to be down into the 50 billions to show indications of improvement. And that number is typically in the 80 or 90 billions. So we'll see how that comes out. All right, that's a quick check on markets and the economy. The U.S. economy is doing okay. A low growth economy, still with inflation concerns. Still have real problems at the government spending level, especially at the federal level. Massive deficits continue. The Fed's likely to cut rates here in December. I hope they don't, but market right now, the expectations are they will, 25 basis points. Household debt, government debt, business debt continues to rise. Equities in a bubble for sure. AI bubble. The consumer's still there. All-time high in credit card debt, though. We see some improvement on the trade front. We see some improvement maybe on the war front with respect to Ukraine, Russia. Christmas season's coming up. So retail shops will be busy. Restaurants will be busy. New York City will be packed. Mondami starts his role as mayor January 1st. That's going to be very interesting to watch, see how that develops. We have ongoing battles between ICE protesters and ICE trying to do their jobs to pick up and deport illegal immigrants, creating lots of strains and stresses around the country. Trump continues to follow through on his promise to secure the border and reduce illegal immigration. And unfortunately, Democrats don't like that. And so they're making the job much more difficult than it should be. Remember what Trump is doing with ICE is legal. It's our law. He's just enforcing the law in a way that no president has for a long, long time. And the violence that's coming from this is generated by the protesters. Anyways, tough situation for sure. We're going to have to watch that carefully. Of course, we had the shooting by the Afghan national of 2 National Guard troops. Horrible event. It's got Trump even more revved up on immigration. All right, let's leave it there for now. That's all I have for you. Always try to buy American.